This is episode 264 of Zen and the Art of Real Estate Investing with my guest, Joel Miller. Joel is a veteran of the game. He started in house flipping, got into rental property investing, and now he is into lending. He's also the author of Build Real Estate Wealth. Enjoy the journey of rental property investment. Joel, welcome to the show.
Well, Jonathan, I've been looking forward to this. Thanks so much for having me.
Yeah, I'm excited to talk to you. We were saying it's kind of like a triple threat. You've gone down the rabbit hole in all three of these areas over your career. But what was the first part of real estate that you got started in and why?
Well, I guess I should, adjust what you had said. Initially, you said I was in flipping and then got into holding property. It was the
other way.
Yeah. As is the case with a lot of people, because the ability to flip doesn't always come until maybe you've accumulated some cash that you can use for buying property with cash.
And you know more about houses after you've had some rental properties.
Right. Well, so what you're asking is like, what the heck happened to this guy that he made this crazy decision to invest in real estate?
Yeah. Why real estate? Yeah.
Well, Jonathan, I would tell you that two very specific things happened to me in junior high that set me on my path. And the first was that an investor built four unit apartment buildings at the edge of our subdivision, right on my paper. So of course I got all those new tenants as my customers on my paper.
Yeah.
That's another entrepreneurial rabbit hole to get down. But anyway, but I have a distinct memory of in my bedroom in like about 8th grade, sitting there doing the math on what this whole rental property thing was, because we lived, me and my friends, we lived in a nice, subdivision that middle-class subdivision that we all had single family houses with parents, and so this whole thing with these rental properties at the edge of our subdivision on these lots that nobody had bought to build houses on was a little different. So I kind of worked it through, and I said, so, these people don't own this place and they pay more money to the owner than it costs the owner to operate it, without elaborating it. I just stuck it in my back pocket. And I said, I want to do that someday, And the other thing was that one of the older kids in the neighborhood built a pirate radio station in their basement and used a flagpole in the backyard for an antenna. And I got to hang out there. A pirate radio station is an illegal radio station. It was not licensed by the agency. So that is when I made the decision I want to be a disc jockey. So of course I went to college for accounting.
Yeah, I mean that just makes perfect sense. Yeah, it's good for people to know because the journey really is never linear. I found that across the board that a lot of people who've done enough business and then get into lending themselves really find it to be nice to help the other people. Obviously the returns are good or it wouldn't be a smart business move, but you also get to see people who are like yourself early on and give them the opportunity to get into something while also doing the underwriting yourself to make sure they're not making a bad deal. So you're not making a bad deal.
Exactly. And that's why I don't recommend hard money lending to somebody who just, and this happens, they come to me and they say, hey, I got like X amount of dollars. Enough money, hundreds of thousands. I'd like to get in hard money lending, but they've never been in real estate. They've never owned a rental. They've never flipped the house. They tell them I don't recommend that you do that because I don't lend money on any property that I haven't walked and discussed the project with the investor. And, to be honest, they're not asking to borrow money on any sort of a project that I haven't already done myself. Yeah. So sometimes I'll just ask questions like, hey, have you seen this? Like, what do you think about this? What's your plan here? And I'll be honest with you, by the end of the walkthrough, Jonathan, sometimes that investor is absolutely sure they do not want to buy that property. Yeah. Not because I talked them out of it, because I asked them the right questions and they decided on their own. But you mentioned underwriting. The underwriting's on the issue. I can tell you at the end of the walkthrough if I'm going to lend you any money and how much it's going to be and what the terms are. And then, of course, after that, the paperwork is what you'd expect from a bank. We lock it down with the proper paperwork, deeds and mortgages and guarantees and assignments of rent and all that stuff,
Yeah,
But
but in the world of technological hard money, this is much more of a personal touch. You're there giving advice as well. So
right.
it's feels
Yeah.
more like a partnership than a lender, client relationship.
Yeah, exactly. It's all built on relationships, which is why I really only land in my immediate area of northwestern PA,
Yeah.
southwestern New York, northeastern Ohio. I'm not on your podcast to try to get hard money lending clients. Believe me, I can do enough
You can
business
always
with.
have enough of
with
those.
yeah, I just I hope we talked about my book a little bit. That's the
Yeah,
area, but
of course.
but I have this thing that I tell people that are I say that, and I say this because they occasionally bring up that they've gotten something in the mail or become aware of somebody that they would count as a hard money lender that they are considering for their project. And I say, well, I have this axiom, and that is that the further away that lender is geographically from where you are investing, the more that lender is going to seem like a bank to you,
Yeah, it's a great
because
point.
that lender is not local. So they got to ask a lot of questions. I know if I was lending money in your town, I would have a lot of questions and a lot of qualifiers, and much more so than what I do when I'm lending locally. And I know we didn't mention this yet, but I've for many years been active in the professional organization of landlords in our part of the state. And I right now I'm the vice president. I was our longest serving president in the past, and uh, along the way got involved heavily with teaching the we call it Landlord 101 class
Yeah.
that our organization authored. And I also teach part of the 201 class. And this way I get to know a lot of the people early on in their journeys. And so by the time they ask me for money and they've been coming to the meetings that we have every month and they've taken the class that I taught, I know a lot about
Yeah.
it. And it's easy for me to make a decision.
When you started with rental properties, what was the first property that you got? Because you said 1978, I think. What were you
Mhm.
looking at and what were your goals at that time?
Well, at first I was looking at properties that were listed with a realtor, and I figured I was in like a 2 unit type mode, there.
Yeah.
And what actually happened was I bought a 2 unit that had a tenant in the upstairs and nobody downstairs, and the downstairs had 4 bedrooms and one kitchen. It was an addition on the back, so we quickly turned that into 2 units on the first floor. One was a 1 bedroom efficiency, and the front unit remained a 2 bedroom, and so we had to put in one kitchen and one bath. And I still own that property.
Oh,
Because
wow.
it's a
That's awesome.
cash cow,
Yeah.
Jonathan. It's a cash cow. There's 3 garages behind it too that I've never rented out to anybody living there. They're rented, independently.
Yeah.
So um, that was what I was doing. And I can tell you that, and this may shock, some of the listeners, that first property was the only property that I ever bought that was listed.
Oh, wow.
Every
Yeah.
property I have obtained since then was off market. The best deals are off market. And the best deals are the guy across the table for you at your investors meeting.
In landlording, I was doing collections for my dad when I was 15. So I knew all the tenants and encountered all the problems and realized it was a person to person game, as we've been talking about. But I mean, are there any other potholes that you think rental property investors fall into outside of the tenant selection and the repairs that we've talked about?
Well, I think expecting too much is kind of a mental thing, and we've been spoiled a little bit with the uh, economic atmosphere that we've had
Yeah.
since a lot of the newer investors have gotten involved. And I'm talking about especially since 2008 with the housing crisis. Then I've been in this business long enough that I've seen several cycles of up and down. When I bought my first rental unit, um, the this 1978, Jimmy Carter was president. He was wrestling with inflation, and prime was 22%.
Yeah.
car dealers were going out of business because they couldn't afford to floor plan their cars,
Yeah.
the interest rates that were being charged. And fortunately, things straightened out. But I can tell you, I was a tenant myself in an apartment complex for 5.5 years before I bought my own first personal residence. And I was pleased in 1983 to get a mortgage for 12.5% on my
Yeah.
first mortgage.